Hi everyone, let's go over my micro and local bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the micro bullish scenario where we've been looking for a three-wave structure hitting the target area for then continuation to the upside in an impulsive structure. Now what we see on the chart is the 886, and that's important because the 886 is pulled from the high to the low of the corrective structure, and usually in a more bearish scenario what you want to see is the 886 then being hit and immediate continuation to the downside. The longer price is ranging around the 886, the more bullish it actually is, where the probabilities will increase for price to take this high. As you can see, price now also created a double top at 31.4k as we have high number 1 and high number 2 at the moment, and double tops are usually a magnet for price. If you go to the bearish scenario, then we have the ABC and the WXY on the chart. Now WXY is a 333 scenario where the support area over here around 29k is very interesting, and an ABC is a 335 scenario. Preferably it's going to be a WXY if we think about the bearish scenario, and the main reason has to do with this 1.618 because the yellow fips that you see in the chart are pulled from the low of this W to then, if you think about a three-wave structure, right, a 1, 2, 3 wave move, and then you pull the yellow fips from the low of the first move to the high of the first move to then the low over here, and then an A, B, C. So the low of A to the high of A to the low of wave B. Most commonly in corrective structures, if this is an ABC 535 scenario, then the target is going to be in between the 1 and the 1.236, which is between 31.5k and 31.8k. The 1.618 is a bullish target for a wave 3 because you pull it exactly the same. If we're talking about the bullish scenario, it's a wave 1, 2, and then you're looking for a wave 3 where the minimum target is this 1.618. So the moment price is going to go above this yellow target area towards the 1.618 in yellow, the probabilities increase for this to be a bullish market structure, bullish continuation, and then a 1, 2, 3, and then higher prices to be expected. That also means that therefore this wave B scenario in an ABC for me is less likely, because the moment we are going to reach the wave B target area, it means that we are getting very close to the 1.618, which is for the bearish scenario not something that you want to see. This is also very close to the 2022 range high, so one could still expect potentially a rejection, but still the 1.618 is hit. If you do hit these highs, one could potentially range below, create bullish divergences, eventually CVD divergences for then continuation to the upside. That's much higher probability the moment price is going to reach these areas over here. Now, of course, if price would move to the downside, we have that support area 29k, potentially an interesting setup, of course, depending on how price comes to the downside. And then you have to look at your own entry requirements for potentially long setups in this area, of course. If you then zoom in to the local market structures and we go to the 30-minute over here, then in the bullish scenario, what you want to see is continuation and then a wave 1, 2, 1, 2 for then a bigger 3 towards the upside. This means that this then is a wave 3, because we have to zoom out for this one. This is going to be a wave 3 of a wave 3, because this is again a 1, 2, and then this is a wave 3, right? So this is then a wave 3 of a bigger wave 3 of, and there you go, even a bigger wave 3 if we go to the high time frame scenario. So this has to be a very big impulsive move with high volume and big candles. That's what you want to see, volume increasing with price moving towards the upside. Now you can see that I put the invalidation on 30.8k, because if this is a wave 1, 2, and another 1, 2, you don't really want to see price coming back into this wave 1, especially if you potentially think about this being a 1, 2, 3, 4, 5 wave scenario, which actually would be a bit more bearish because this is then a very early wave 4 and then a wave 5, right? So because you're going to have a 1, 2, 3, 4, 5, which then means that would be the high of the green 3. So then you expect a green 4 and the green 5, and then that's like the end of the move, right? So that's not really something you like to see. So this range is a little bit of pain in the ass, to be honest, for the very bullish scenario where you want to see continuation, unless this becomes another 1, 2. Now, what are the probabilities, right, for a 1, 2, 1, 2, 1, 2? It happens especially at the beginning of bigger wave 3s. However, most commonly, what you want to see is a wave 1, 2, second one, second two, and then the third one like this. So what you then create is a diagonal. Many people confuse a triple 1-2 setup with a leading diagonal because it looks the same. But clearly after this, you want to see a big push towards the upside and never look back. And that's the thing over here, that we are now ranging over here, and that's not really what I want to see. But of course, it doesn't invalidate the bullish scenario because, hey, 30.8K is currently the invalidation we have for potentially this being then a 1, 2, 3, 4, 5, as wave 4 is not allowed to enter the price action of 1. But you want to see continuation, right? Big candles, big volume. Now, the minimum target for the green wave 3 is that same 1.618 as explained earlier. The moment we hit this, probabilities go up for eventual continuation to the upside. If you go to the more bearish scenario, then in this scenario, we have a three-wave structure, right? WXY, where this is the yellow target box you saw earlier, but I now made it blue because now I actually have the pull on my chart. It's blue because it fits the blue count in an ABC. These fibs are pulled from the low to the high of A to the low of wave B, for then eventually inside a wave C, a 5-wave move. So currently price then working on a potential wave 4 over here, for then a wave 5 to the upside. What's interesting is not to forget, we have that double top over here at 31.4K for then maybe a grab, move to the downside. Also, this white line at 31.745 is one of the highs of 2022. So all the three lines you see are 2022 range highs. So maybe again, liquidity grab for then a move towards the downside in this particular scenario. The invalidation is the same though, because if this is a 5-wave move to the upside, you don't want to see wave 4 entering the price action of this wave 1, else it becomes more bearish, right? Now in this scenario, I think it is important to mention that between the bullish and the bearish scenario, and thinking about probabilities, is first of all, this move to the upside in a wave 1 or a wave A is not very clean. You can count 5 waves over here. It's not a nice and clean impulsive structure, but mainly this move over here, this wave B. So maybe you've seen it already in a bullish like scenario. It hit the 382. The 382 is a rare target for a wave 2 and a common target for a wave B. Also, this move was very long in time and very shallow. Again, more reminiscent of potentially a wave B than a wave 2, as wave 2s usually tend to be zigzag structures like sharp and short. So a 5-3-5 wave move, short in time, sharp retracement to like the golden pocket, the 05 or the 786 for then continuation. But both of this didn't happen. It's very shallow and it's very long in time as well. Now you do have the rule of alternation, where it says that if you have bullish market structure and a wave 2 is shallow and long, then a wave 4 tends to be deep and short, right? So it is possible, especially at the beginning of potentially bigger bull markets, wave 2s can be very shallow because it helps the market to make people miss out on the move that's gonna follow, right? Because the deeper the retracement, the more people might enter at lower prices, and that's not something that potentially like market makers and the market looks for, right? So this is very, very interesting, where again, this area is going to be important. If price is going to push through this area to that 1.618, probabilities for a wave 3 are going to increase. So we have to observe what price is going to do. If we look at the CVD divergences, then the bigger bullish CVD divergences have played out that we had in the range. Higher lows on price, lower low on the CVD. Bullish CVD divergences target where these highs has been taken. If we look more locally, we have also some bullish CVD divergences, higher low on price, lower low on the CVD. Did came down quite quick though, and then this move to the, I'm not sure if I like it the most, but at least we do have bullish CVD divergences. And if we go to the 5-minute, then what you can see is a lower high on price, but on the yellow line, we actually had bearish CVD divergences. That's also because this candle over here, the high has been made with a red candle. So the yellow line, as you can see, as well as the blue, but the yellow line, the CVD moving to the downside. So if I put my cursor on the high, on the yellow line high over here, then you can see that on the right side, price actually went above the yellow line. So that's a bearish CVD divergence, lower high on price, higher high on the CVD. So it's a bit of a mix. It's not very clean just because the candle at the top is a red candle and not a green candle. So a bit of a mix on the lower time frame, and we just have to wait and see what price is going to do. Now, if we then do go towards the probabilities, then over here If we look at the micro scenario, I wrote bull, but actually it needs to be bull and bear, because in both of these scenarios, right? Let me actually change that so I don't cause any confusion as well. Because in both of the scenarios, we would prefer a bit more to the upside, right? Because we have that double top. The 886 is not well respected. It has been a range over here. So preferably, even though price drops, we prefer to see a little bit of a move towards the upside still for both wave X or for a potential move towards the upside in a wave 3, right? So in a micro scenario, preferably we see a little bit more upside, both in the bullish scenario and both in the bearish scenario. Where if we then go to the local scenario over here, so the two local ones, it's so close to 50-50, because again, we're looking for upside both in the bullish scenario and in the bearish scenario. This is an interesting area. It's just all about, are we going to push through this area towards the 1.618 or not? And I just explained that the fact this price action has been ranging over here might increase the probabilities for the bearish scenario, because if this is really a big bullish impulse to the upside, you want to see price kick ass, right? Bam, move to the upside, big candles, big volume, never looking back, you know, everyone FOMO, miss out, all that stuff. But now we have like this going on, which, you know, potential is a 5-wave move, which is then more probabilities for the bearish scenario. So yeah, maybe in the micro and on the local, the bearish scenario currently has a little bit higher probabilities, but we have to observe how price is going to react in this area. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'll see you at the next one. Bye bye.